Chris Moore here. Today, we're going to talk about one of my favorite account titles, Roth IRAs, and the benefits of them and some of the things you've got to be careful of when you're considering a Roth IRA. Okay, let's start talking about Roth IRAs. And the first thing we're going to discuss is, what is it? It is an IRS regulation. You can find details on it in IRS publication 590A that has all the details on who can contribute and stuff like that. Really, the key to it, a couple things. One is that it can be either a regular account or an annuity. Okay, it's an individual retirement account. Okay, so it's individual. You can't have joint. Have sometimes, oh, can me and my husband have the same account? No, individual. So remember that. The other point about it is when the account is opened, it has to be designated Roth IRA. You can't like open it up as one thing and then magically turn it into Roth IRA. It's got to be a Roth IRA once the account is open. So that's what it is. Okay, so what's the benefit of a Roth IRA? The main benefit of a Roth IRA is under normal conditions, if you meet all the conditions for a Roth IRA, all of the earnings are tax-free. The other nice thing about it, as the account earns over the years, it's all tax deferred. It doesn't come and it isn't reported on your tax return until it's time to take it out. And when you take it out, it shouldn't really hit your tax return either. They'll notice that, but they'll have that you took it out, but that it was non-taxable. What should you consider? Well, I think the biggest thing that I would tell you to consider is that when you put in a Roth IRA, you don't get a tax break. So that's always something that you want to consider when you're thinking about a Roth IRA. No tax break. Has to be opened at least 5 years. So any distributions that happen before 5 years, even if you're 80 years old and you open up a Roth IRA and then you take the profits out 2 years later, no. That will result in a penalty. Here's the other thing. You can't put in, there is a maximum amount you can put into a Roth IRA or a regular traditional IRA. They're both combined together. So you can't, if the maximum is $6,000, you can't put 6 in a Roth, 6 in an IRA. You really only can put in 6 total for the year. That's the most you can put in either kind. So picking what type of account you put your hard-earned money in, it can be important, or it is important to me. Okay, now we're going to say I get this question a lot. It's a really interesting question to me. And here's the question. How much does it earn? How much does my Roth IRA earn? Let me think about that. You know, really, that question, right, it really depends on what you invested in. If you open up an IRA in a highly aggressive stock fund, it could do really well. It also could lose a lot of money. So Roth IRA doesn't prevent that. You could have losses. If you open it up at the bank in a savings account, I don't think, well, at least nowadays, with the rates of return, you're not going to get much of a return. Both are Roth IRAs earning different things. So really, Roth IRA has nothing to do with what it earns, the account earns. It's actually how you invest the money that's in your Roth IRA account. So, who can contribute? Let's talk about what normally somebody comes in, they want to put in a Roth IRA. what things do we have to look at? So there are income constraints, meaning that if you earn over certain amounts of income, you can't put into a Roth IRA even if you wanted to. And it really goes back to your adjusted gross income. If you're married filing jointly, and this is for the 2020 tax year, you can't have more than $206,000 in adjusted gross income. If your adjusted gross income is over $206,000, you can't do it. If you're single head of household, it's $139,000, and if you are married filing separately and you live with your spouse, it's only 10 grand. So that's it. The other thing is you can't contribute to a Roth IRA if you don't have earned income. W-2, 1099, let's say you're retired and you want to put into a Roth IRA and you don't have that, you can't contribute to a Roth IRA. Now we're going to talk about backdoor Roth IRAs. Are they illegal? No, they're not illegal. They're just a strategy. And basically the strategy is this. You put into an IRA, it's non-deductible, you can't take it off your taxes. That creates a cost basis. You roll that amount, you convert that amount in a Roth IRA, which normally would be taxable, but you're allowed to take your cost basis off. So basically, that's a backdoor Roth IRA. Look for our video that goes through much more detail on that. So the last thing we should consider on who can contribute is, hey, is there an age thing? So what's the maximum age for a Roth IRA? Well, so per the publication, there is no maximum age. You can be as old as you want. I think the key, though, is this. You can be as old as you want, but you have to have either W-2 or 1090. You have to have earned income. If you don't have earned income, like I had said before, you can contribute to a Roth IRA no matter what age you are. Okay, we're all done. So to summarize, we've gone through a lot of things about a Roth IRA today. We'll put a quick list down in a second. The one thing you should consider, if you have any questions about Roth IRAs or open up Roth IRAs, hey, that's what a financial advisor is for. So seek out a financial advisor if you don't have one. Thank you very much for watching.